This is the Seido Trading Learn to Trade series. My name is Hamish. I have been trading the markets for over 10 years. These lessons are the result of that experience. What worked, what did not, and what I would learn if I were starting again. The series covers the fundamentals of price action, breaking it down into clear principles. Each lesson provides definitions of price action concepts, followed by examples taken directly from the market. Once we build this framework with clear definitions and have criteria for how market participants respond to price, we can then make informed observations about the likely future behaviour of the market. This is a structured course. Each lesson builds on the one before it. The concepts are sequenced deliberately so that if you skip ahead, you may miss context that later lessons assume you have. Attached at the end of every lesson is coursework. This is designed to build your ability to apply these principles that we've just covered. What we're doing is we're building your ability to read price, so take the time to invest in the work. This is not a trading plan or a system. It's a series that will drastically improve your understanding of how markets respond to changes in price. What we're doing is we're teaching you to read the market. That understanding will allow you to make your own decisions based on the proven fundamentals of price action. The great thing is that price action is universal. So the same principles that are taught here apply to any market across any time frame. So let's begin. Candlesticks can be broken into three main types: bullish and bearish candles, strong bullish and bearish candles, and trading range candles. A bullish candle is any bullish candlestick where the body makes up more than 50% of the total size of the bar. It's closing above its midpoint, so it's closing in the top half of the bar, and it has small wicks or no wicks on both the top or the bottom. A bearish candle has the same criteria in the opposite direction. So a body greater than 50% the size of the bar, it closes below the midpoint, and there's small or no wicks. Strong bullish candles are defined more tightly. They still have a body greater than 50% the size of the bar, but they now close in the top 30% of the bar. This is a very important distinction. Strong bearish candles are the same in reverse. They still have a body 50% the size of the bar, but now they're closing in the bottom 30%. These are all examples of bullish and strong bullish candles. I want you to pause the video a moment here and identify which ones are bullish candles and which may qualify as strong bullish candles. And these are the bearish examples. Again, pause the video and make sure you can identify which are the strong bearish candles and which are regular bearish candles. All other candlesticks on a chart should be considered trading range candles. So a trading range candle can take many different forms as long as they don't meet the criteria for the candles we've already discussed. They tend to have smaller bodies and larger wicks, and they often overlap with prior candles without showing clear momentum in either direction. By having a very clear understanding of individual candlesticks, we can develop a very deep understanding of how traders respond on a higher time frame context. So when we're looking at a daily chart, we can develop context which we can apply to a lower time frame chart. All of this will make sense as we progress through the course. One of the most important things to understand as a developing trader, though, is that there is no single candlestick that will consistently produce a result. Do not fall into that way of thinking. Everything you hear about shooting stars, hammers, doji candles, inside bars and outside bars, there's no single candlestick pattern that should be traded the same way every time. So attempting to trade any one candlestick pattern with the expectation of being consistently profitable is not a viable approach. A strong bullish candle can represent a strong sell signal just as much as a strong bear candle can be a good buy signal. This is covered in later lessons where you'll understand exactly why a strong bullish candle can sometimes be a great condition for sellers. Identifying bullish, bearish, strong candles, trading range candles, these are all just ways to help us make more informed observations and reduce the number of decisions that we have to make. Before the next lesson, pull up a chart of any market you want to trade. It really doesn't matter which one, a stock, an index, a futures contract. Your task is to start classifying the candlesticks. Identify which ones are strong candles and which ones are trading range candles. As you do this, observe how the price is behaving. So when it's moving higher, are there more strong bullish candles? And how are traders responding to a strong bullish candle? Are they responding differently when it's early in a trend? How do they respond to the same or similar looking candle when it's late in a trend? When price pulls back at the start of a trend, are the candlesticks predominantly bearish, or are they strong bearish candles? Or are they trading range candles? So take the time to study the candlesticks discussed in this lesson on your own chart. This work forms a foundation of your understanding going forward. So when we begin learning market structure in later lessons, this groundwork now will accelerate how quickly the concepts connect. That's it for lesson 1. You now have clear definitions for bullish, bearish, strong bullish and strong bearish candles, and trading range candles. In lesson 2, we'll cover how to read those candles in context, momentum, trader behavior, and how price transitions from a range into a trend. See you there.